And Jeff, good morning to you too. Not to leave you out there, buddy.
Morning, Jeff. You're on. Morning. Hey, Marvin.
Yes.
Good morning. Who is MotoTab?
Yeah,
I
it
believe
says,
that might be Virginia. We are now recording and live on YouTube.
thank you, Marcia. I have 11:30. Would you like to give a couple minutes for Virginia?
Now, it looks like she's trying to connect.
So that's what that is there. Good. There we go. As I always say, as nice as a Zoom or a GoToMeeting or any of the other softwares you're using, as nice as they are with what's going on now, it's still better to be in person. That way you can tell if someone's actually there and can hear you or not. So that's a good thing. Hi, Claudia. Brian. I think I see Brian back in the back. Still see Moto's having problems, but are we ready to start?
Yeah.
Rebecca, are you ready?
I am ready.
There's Marcia. Hey, all right. Hi, Marcia. So I guess we'll go ahead and get started. I'd like to call the Finance Committee meeting of February 23rd, 11:30 a.m. ready to go. Marcia, if you could do roll call, please.
Mr. Lewis,
Mike Lewis, Portage, I'm sorry, Ravenna Township.
Mr. Childers, Mr. Childers, he's on there, but it looks like he may be muted.
Thank you.
Ms. Harris, she's still trying to connect. Mr. Ginn,
Middle Portage County.
Mr. Woods,
Marvin Woods, Eastboro.
Marcia Fletcher, PARTA,
Claudia Amrine, PARTA.
Rebecca Schrader, PARTA.
Kelly Jerish, PARTA,
Clayton Popick, PARTA. Brian Troutman, PARTA.
Denise Devil, PARTA. That's everyone.
Okay, thank you so much. And I heard Kelly, but I didn't see Kelly. Is she in the room or is she online? There she, oh, she's, that was a perfect line. Hi, Kelly. All right, well, it's COVID-19, so there's no guest communications. Anything on old business? It seems like, as I told Rebecca earlier, it's been a while since we've been together. So anything on old business, Rebecca?
Not that I'm aware of.
Not that you're aware of. Anybody else have anything for the table at this time? Too easy. We'll go into new business. Rebecca, please.
Okay, so I am going to share my screen. Give me a minute here.
This is Virginia.
Virginia, thank you.
Thank you, Virginia.
All righty. I'm having problems.
Right, here we go. So can everybody see my screen now?
Perfect.
Yes.
Okay. Very good. So I did send out or emailed to the Finance Committee, but I know we have some extra people, and I know Virginia doesn't get the reports in time, so thought we would put them up on the screen. Plus, there might be some other tabs that we'll go into and just review where we ended up for 2020. So feel free to interrupt, ask questions as we go along, and I will
Becky,
try and answer them.
Becky, it was delivered to
Yeah.
me. I have it.
Oh.
Okay.
Oh, very good. Thank you.
Uh-huh.
All right. So what we're looking at is for the month of December for the year 2020. And most of it is the same as what we've been talking about over the last few months. We were under budget. We'll just look at the year-to-date actuals. We were under budget for Farebox, about 148,000. We were under the budget amount for agency cash grants in the amount of 109,000. KSU revenues, we were under budget by 672,000. We got what we expected for the state fuel reimbursement. That was actually over a little bit. We received an additional $50,000 in federal capital maintenance assistance from when I did the budget. As you guys all are aware, we ended up receiving CARES amount that was not budgeted for in the amount of $4 million, which you will see really helped us out. A little bit of mobility management money, which was left over from an old grant. We came in under budget in investment income, and we came in over budget for sales tax revenues, which was a surprise. We received an additional $343,248. Keep in mind that the number that'll show up on the audit report will be slightly different than that because of the accrued sales tax receivables, revenues, and the expense, the 1% administrative expense. I actually have to accrue 3 months of that revenue. So January's, February, and March's revenue will also get counted for year-end 2020. So that it just is slightly different than what you will see today. I should have said this at the beginning. As a whole, these reports may change slightly because of audit adjustments. I still need to book year-end fixed assets and depreciation and accumulated depreciation. The accrued payroll has not been posted yet. It's all part of the year-end adjustments I have to make. And the pension liabilities with the Gatsby 68 and 75. So there will be some additional adjustments that will need to be made before the auditors get here. I'm expecting them maybe later at the end of March in April. So just wanted to throw that out there. Other revenues was over budget by about $70,000. So on the whole, we received $10 million more than what we, wait, sorry, I'm in the wrong column. On the whole, we received $3.7 million more than what we had budgeted. Of course, the $4 million being the CARES money. So we received $14 million in revenues, which was 135% of what was budgeted. As far as salaries go, I'm gonna freeze my frames here so that, whoops. So you can, so I make sure I'm on the right column. You can see the actual expenses that we were spending. We were under budget for all of them, quite a bit under budget. And then we were slightly over budget for health insurance. If you recall, during the year, we reported that our claims were higher. We had some large claims. They were higher than what we had thought that they would be. So we had increased, I believe it was in March, we increased the amount that we were paying every month. So that is why we are over budget for health. and fringe benefits just slightly. That is one of the numbers that will change with the accrued final payroll and liabilities for our wages and benefits. So we were over budget by $50,000 for professional technical services. We were over budget by $49,000 for capitalized maintenance. But for the month of December, everything was under as what we expected. Fuel, I don't know if I just said that, but fuel and lubricants on the whole was a total under budget by 210,000. Other materials and supplies were under budget by 168,000. So I guess the bottom line, you can see by the numbers, as COVID was happening and we knew our revenues weren't coming in, we really tightened down on our expenses. So our actual expenses for the year were $8.5 million, which was 87.8% of what we originally had budgeted. And so that we are showing at the end of the year a almost just under $5.6 million surplus. And it's primarily because of the $4 million from CARES and the additional money that we got from sales tax, 300,000. So if you take the CARES money out, you're looking at approximately 2 months, a little under 2 months of operating expenses that we'd be able to continue. You can see for the month of December, we were actually at a deficit of $17,000. We still had all of our expenses and all of our grant dollars have been drawn down. So that is why. Any questions so far? Okay.
Rebecca, real quick.
Yeah.
I mean, I know that this is kind of scattered throughout all the numbers when it comes to how CARES affected us over the last year. But do we have a number on different things that we had to do to make things safe, whether it's the employees, the buses, adding the plexiglass on the buses, things of that nature? Do we have a separate total? I know we got the CARES money, but to say, you know, this is how much we actually spent just to be able to keep things running would be nice to know also.
So as invoices were coming in and we were able to identify them as COVID related, we did create specific account numbers so that we could track that. I know early on I ran that report. I haven't lately, but I can certainly get that for you for our expenses. But that would include things that we did, like employee related things like paid furlough and stuff like that. But I can tell you, I will be able to tell you how much money we paid for COVID related items.
Okay, thank you.
And
Hold on. Go ahead.
Mike, I can add that in the last couple of weeks, I asked Brian to pull together some numbers about the labor cost to do the sanitizing above the normal cleaning that we would do. And so we calculated an average hourly rate and the amount of time the employees have spent. And it averaged out to about $1,100 more a week in terms of the amount of hours that are being spent sanitizing our buildings and our buses. Calculates to about $1,100 in wages a week.
And I'm having a hard time hearing. What was the total then? I heard parts of it. I'm sorry.
Sure. No, labor came out to on average about $1,100 a week.
Okay. Thanks, Claudia.
Okay, moving on to some of the other reports. We have, for part of the A+ report, this just shows you the trend going along. You can see in April and May with our farebox and agency cash grants, that's where we kind of dipped down because of the closures. And I don't know on this report for PARTA if there's really anything else to discuss. But what I want to do is look at the comparisons. And I have been asked to present this to the board on Thursday. This report here, it's called a yearly comparison. It is a draft, as I mentioned, not all of the numbers are quite in, mostly for wages and fringe and sales tax. But you can see what we had for actual in 18 and 19. It shows what the approved budget was for 20, and it shows what the actual was for 2020. So you can see from 18 to 19, we had, for revenues, we were pretty stable. It changed 0.5%. And then when you compare 19 to 20, you saw a lot of decreases, 48% in farebox, 40% in agency cash grants, 26% decrease in KSU revenues. What else? 43% in investment income, even though that's a small number. But we were able to keep going because of, again, the CARES grant, because of the additional OPT2 funds. We received some additional capitalized maintenance from the state this year, and also with other revenues, with selling vehicles that were past their useful life, as well as some of the maintenance revenue we get from Head Start and Family and Community Services. So looking at expenses, again, we have the comparison from 18 to 19, and then the budget for 20. In fact, I need to, let me freeze, hold on, let me freeze my frames. Okay, there we go. So you could see for wages, for driver wages, for instance, the wages decreased 11% because we didn't put as much service on the road. Students' wages decreased 44%. Again, classes were either canceled or put on virtual, so there was nobody on campus. Our service decreased and we had less drivers. Advertising fees decreased from what was budgeted, or from what was expensed from the prior year. Other materials and supplies, there is a big increase for materials and supplies. I don't have an answer for that one. That one didn't stick out to me until just now, and so I want to do a little bit more research on that number. Utilities pretty much stayed about the same. It increased 7% overnight. Oh wait, I'm looking at the budget. Sorry. We had increased more on purpose, and it did increase over 19, but came in under what we had budgeted. That's good. So from looking at expenses from 19 to 20, our expenses decreased about 6% from the prior year. And you can see we had expected to have a surplus of $663,000, and we came in with a surplus of almost $5.6 million. This number down here at the bottom, these percentages, this is our total expenses compared to our total revenues. And you can see that, so it's the total revenues divided by the total expenses. Whoops, And you can see that that drastically decreased going from 19 to 20. Any thoughts or questions? There's one more comparison sheet that I want to talk about. So these are the last 3 years in actuals, basically the same numbers that we just looked at. But I wanted to point out our operating revenues. These are the red numbers, the descriptions, the fare box, agency cash grants, and KSU revenues. That's what make up our operating revenues. You can see that in 18, it was $2.8 million, in 19, $2.9 million, and in 20 was $2 million. So what is important is, let's go down here at the bottom. Percent of operating revenues, which is what we just went over, compared to our expenses. So 31%, let me make sure I say this the right way. So 31% of our operating revenues, I can never say this right, pay our expenses, or somebody help me out here. Our operating expenses cover 31% of our expenses. That's right. Our operating revenues cover 31% of our expenses. You can see in 2020 that 24% of our operating revenues covered our expenses. So that is pretty significant. I want to go back up here to sales tax. This is comparing sales tax to our overall total revenues. So in 18, sales tax made up 56.5% of our total revenues. You can see in, and this is because of the CARES grant, sales tax made up 41% of our overall revenues. If you would take out the CARES money, in fact, I think that's what this number is out here, sales tax made up 86.7% of our revenues. So you can see that we relied a lot on our sales tax and the CARES money because we weren't pretty much getting it from our operating revenues. So there's some statistics there for you to take a look at. You can see down here we categorize our expenses. 76% is labor and fringe, 7% is in the services category, 11% make up fuel, materials, and supplies, 2% of our expenses are utilities, 3% is for our self-insurance, casualty and liability, and 2% for miscellaneous. Any questions, thoughts? It's a lot of numbers.
You're correct.
Right,
That's
I
a lot
just
of
wanted
numbers.
to say again.
I said you're correct. That's a lot of numbers.
Yeah. I wanted just to quickly show you our sales tax. Our sales tax comparison, which I think I emailed to you and put it in the packet. There is a tab here that shows the ranks. So for 2020, usually March is our best year. In 2020, it was our second best month. It kind of flip-flopped between September and March of this year. And then third place was November as opposed to December. So that's how it shook out for 2020. We ended up having 6.4% more sales tax revenue than we did the previous year in 2019. So whereas we were budgeting and projecting that there would be no increase or even a decrease because of COVID, that's what we were expecting. We in fact saw a 6.4% increase in sales tax revenue. Okay, moving right along. The next report will be our capital report. I mentioned before that we had a $17,000 deficit that was on the operating report for the month of December. There were no federal or state capital drawdowns in the month of December. We did have some expenditures that were booked at year end. We didn't receive those invoices until after year end, but because of accrual accounting, I still booked them in the month of December. And then we drew them down. It was either at the end of January or the beginning of February. So you'll see in the next coming months, you'll see the reimbursement for these capital items. We received in December, there was only we received 3 of the 5 buses in December. The other ones I believe came in January. So there's 2 line items here, one for $14,000, which was the remainder of an older grant. And then, but it's separated in expenses just so I can keep them separate and comparable to the top revenue for the draws. And then $262,000, that was for the 3. So you can see there's a remainder of $166,000 out here in column Q, and that was for the last 2 vehicles that we have now received but haven't been booked as of December 31st. We had a couple additional invoices for Campbell. Actually, we closed out that project. All the invoices have been received. They've now been paid out. And you can see that there is $588,000 left in that line item that we will be using for the build out for the storage facility, which we are working on design work currently with our A&E company. So that'll be coming to finance and the board here in the next couple months when we are able to go out to bid for that construction. And that's the money that we'll use to pay for that. We did some updating of our cameras. We put new cameras in the new storage facility, as well as we're able to upgrade some of the cameras in our building so that it's kind of all on the same system and updated equipment or software, but just gives us better video. And that actually was more than what we had grant dollars for. So I believe that was actually around 60. I think that's what these 2 items are for, also the component rebuilds and facility improvements. Because of the additional upgrades that we decided to do, we felt that that was a value for our overall capital picture. Any comments or questions? In our restricted account, we currently have $2.9 million set aside for the local match of the current grant items. It looks like I've already set aside money for the 2021 LTV buses. We still have 4 diesel transits that are being built, and there were 3 CNG buses that we had started to order, but because of long build out times that, if you recall, got recalled, or the resolution was rescinded, and we'll be going out to bid for those buses here shortly. And then there's future capital projects that we've been putting money away for, as we know, in the next 4 years, in 2023 and 2024, there are many buses on our capital replacement schedule that need to be replaced that we had received all at once. So we are getting prepared for that. Any capital questions? Okay, the last report for PARTA then would be the statement of net position. I have two of them here. One is comparing November to December, as you would normally see. Our receivables decreased between the 2 months. Our cash increased. You can see the capital items that I just talked about totaling $870,000. Those are the big things to report. Accounts payable did increase. As I mentioned, we received those Campbell invoices at the end of the year that had not been paid as of December 31st. We have, like we do every December, we have unearned revenue, almost every December. This is money that we receive at the end of the year for our E&D state grant. They usually send it to us early, so we book it as an unearned revenue, and then we will realize the revenue in January. The last tab that I have here, I'm calling the C+ report, and it's actually comparing December of 2019 to December of 2020. It is showing cash and cash equivalents of an increase of $3 million. Our receivables, as we just saw, decreased quite a bit from the previous December. It normally does decrease in December, but this is obviously more than normal, $173,000 difference from 19. Payroll deferred accrual. This is the money that I mentioned in previous months that it's a receivable. This is money that Kent Central Gateway owes to PARTA outside of any of the waterfall stuff. These are payroll transfers that, because of cash flow issues, we were not able to do in October, November, and December, and January. Actually, we just started back doing the transfers like normal in February, and so we are going to get that money trued up just as soon as we can. You can see our restricted money has increased. These are all the fixed assets that we bought for the year. We spent $4 million in assets in 2020. And you've seen all those projects on our capital report that we just looked at. You can see that I've already booked $75,000 of the advance payables that will be attributed to PARTA's share of the deficit from Kent Central Gateway. You'll see in the next set of reports that we're going to owe a little bit more, as well as the city of Kent. And our accounts payables went up because of the Campbell invoices that I've already mentioned. So that is the picture of PARTA at year end. And if anybody wants to ask any questions or make any comments.
Rebecca, I have a comment. Are you anticipating any additional CARES money?
So it's not called CARES, it's actually called KRSA. And yes, we are going to be receiving probably about another $4 million. We've received the notice from the Akron UZA that we received $3.6 million. And I just received today the Cleveland or the NOACA share of that money. It's called KRSA instead of CARES. And I didn't really have time to concentrate on how much that was, but it's going to be right around $4 million again.
Good.
All right, so we will move on to the Kent Central Gateway reports. The first one that I want to mention, you've already seen this because it was in Claudia's board report, but just kind of going along with the month-end analysis. You can see again, we had the decrease in December of 2020 compared to November, as well as comparable to December of 19. Looking at the whole year from 19 to 20, we saw a 50% decrease in the number of cars parking at the gateway. Just recapping that information, and then you would have seen January's numbers in this month's board report. So I don't want to confuse the months too much. It does get a little bit confusing when we're working on December, January, and then next week we'll be closing February. So doing all 3 months at the same time. So that's parking. The next report we will go into is the income statements. So this is for the Kent Central Gateway for the month of December. No surprises really here. It's been kind of trending. So for the year, we'll talk about variances. We were $104,000 under budget in hotel overnight, $11,000. So we were able to pretty much maintain our monthly parkers. It decreased about $11,000, so that helped us as much as it did. So that was good because you can see we lost about $158,000 in expected revenues on daily parking. That really hurt us. But we were able to continue receiving revenue for retail revenue, the newly addition second floor revenue, and then a little bit of other revenues. So that's overall for Kent Central Gateway. No surprises for the month of December. So in the Kent Central Gateway, I have already booked the payroll accruals and fixed assets. So these are pretty much final numbers for the Kent Central Gateway. We have a meeting on Friday with the City of Kent, so I wanted to make sure those numbers were done and accurate. So you can see that our expenses, so overall our revenues were $357,000. Our overall expenses were $493,000. For a yearly deficit, we ended up at $135,820. So I wanted to point out here that 70% of our expenses are related to salaries, wages, health insurance, and fringe. All of the other expenses, you can see we did not spend what we had budgeted. We worked really hard. We knew the revenues weren't coming in and did not spend the expenses or did not perform or engage in the expenses that we had expected. Our utilities came in under budget, which is good. That primarily was due to closing down the waiting room in the Gateway for a few months. So that helped. But we only spent 78% of the expected expenses. So I'm going to move on to the summary report. Let me make it a little smaller here. And I did put the variance on this report too, the variance to the budget, just so that you can see it all as one big picture. You can see for the month of December, the hotel revenue dipped a little bit, but the monthly parking revenue stayed constant. The daily parking has been relatively constant for the last 6 months. It did dip a little bit in December. We did receive $30,000 for retail revenue and $7,500 for the second floor revenue. So you can see that all again. So on average for the hotel, we received about $6,700 a month. This is excluding the 2 months that we didn't receive anything of April and May. So it's the average, not including April and May. It's 10-month average. And on average, we received $9.46 per validation. On expenses, again, it's the same thing that we've already talked about. So we operated for the year, we operated 8,784 hours of the deck. It cost us, on average, it cost us $56 an hour to operate the deck. We saw a total of $57,000, 57,000 cars, which then multiplies out to be about $8.57 per car. On average, the revenue that we brought in was $5.39 per car. So that's what makes up the deficit. When comparing the years, you can see, so we compared 19 to 20. You can see that hotel overnight parking revenue decreased 60% from 18 to 19. The monthly, like I've mentioned, stayed pretty constant, decreasing only 1%. Daily parking decreased 73%. Our retail revenue did for the year increase 7%. So, and 5% for other revenues. So overall, our total revenues decreased 41%, and our parking revenues, which again are these first three rows, hotel, monthly, and daily, they decreased 45%. This line here reports what percentage of revenue is made up by the parking revenue. You can see in 2019 that 95% of our revenue came from parking revenue, from the parking operating revenue. And then in 2020, 89% of our total revenue came from the parking revenue. So you can see how that decrease definitely hurt us. So expenses, you can see that salary and wages decreased 7% from 19 to 20. Our health insurance did increase 27%. This is for two reasons. Overall, we saw an increase in insurance costs, as well as some additional full-time employees that work down at the Gateway now. Professional and technical decreased 39%. This is a small number, but mostly these expenses are related to IT services that are needed at the Gateway. Our contract maintenance increased 9%. I think this had partly to do with our parking control equipment and also the elevator maintenance that we do. Other services decreased 22%. The biggest expense in that line item were security. There were some changes throughout the year where we lessened their hours and then brought them back in for a few more hours. And so there was just some changes throughout the year with that, but overall it was a 22% decrease for that category. A decrease in 39% in materials and supplies. Utilities, there was a 9% decrease in utilities expense. 4% decrease in advertising. And the other maintenance, if you recall, last year in 19, we had that unexpected tax, property tax expense that we had to pay. So, so really the 100% is a little bit deceiving, but you can compare the year before. We had $1,100 in other expenses, which had to do with mostly the Veterans Memorial ceremony that we do in November. We obviously didn't have that in 2020. So that is the revenues and expenses for the Gateway. Any questions? Okay. So then we should have one more report, which is the balance sheet or the statement of net position. Again, just like PARTA, there's two of them. The first one is comparing November to December. We had some decreases in our checking account, and we had an increase in receivables. That's because I took out all of the prepaids. So normally when the monthly Parkers will pay for several months at a time, I'll just see that as a negative amount on our trial balance. And for year end though, I need to take that out to show what the true receivables were at the end of December 31st. So that's why there's a change there. Our restricted account did not change. You can see that I booked $58,000 in depreciation expense. That's at year end. Our accounts payable decreased. Our net accrued payable increased. This is what I talked about, where Kent Central Gateway still needs to reimburse PARTA for those payroll transfers. So that's the difference between November and December. And so then the second one is comparing December of 2019 to December of 2020. So at the end of the year, we had $11,000 less in 20 than we did in 19 in the checking account, actually a total of $17,000 if you add those two together. And receivables was within $2,000 of each other of the 2 years. You can see there's an orange number on here and there's one down here. I had, in case you were to go back and look at your reports from last December, I will be restating these numbers. There was a change after the reports were produced, and it was just a small change, but those numbers will be restated in the audit report. In 2020, we were able to increase the MMAX account a little bit for our restricted assets. So that is at $21,000. And in 2020, there was a new capital fixed asset category for building. This was when we did the traffic coding. We had to redo the traffic coding in the on the third floor of the parking deck, and we were able to pay for that using grant funds. And then this was the upgrade to our parking control equipment, $10,000, $10,769. So we have an increase in accounts payable. $9,000 of that, again, was what Kent Central Gateway needed to pay to PARTA for the O-Trip. My mind just went blank. Property insurance. We booked it as an expense, but because of cash flow issues, did not pay it until January. It is actually paid now. So that's $9,000 of that was actually a reimbursement back to PARTA. So the accrued net payroll, as I've mentioned before, October, November, and December, $58,677. That was the number you saw on PARTA's receivable that we need to, the Gateway will need to pay back to PARTA for payroll expenses. There's our $75,000 that we've already contributed. And so we showed a loss of $6,900. Again, this was with depreciation expense last year. And then this year with depreciation expense, we're showing a loss of $194,000. All right, I'm going to stop sharing my screen. Feel free to ask any additional questions.
I'll say, everybody, if they can pull out their crystal ball, especially with Kent Gateway, since we just got done with that. What do we think moving forward with the schools and with the Kent State part of that. Do we think that's going to be able to recover maybe second half of 21 if everything holds right?
We really don't know yet. We haven't met with Kent State for our fall planning meeting. We typically do that in May, but we do know that downtown regular events have been pushed back to July at this point instead of April. We just got word about that. So there were some planned events downtown Kent in April that have now been pushed out. I think we'll recover some of our service transit-wise, but I don't know about parking at this point. It really is going to depend on how the vaccine gets rolled out, I think.
You haven't heard any discussions by, I'm hearing not from Kent State, but from other universities, how they're looking at changing models due to what they were forced into doing. They're noticing that it's more profitable actually to provide online instead of in person. But you haven't heard anything from Kent State about adopting or moving that way?
Do you have anything more recent, Brian?
No, the
Yeah.
last conversations that I've had with Penn State have been pretty, they really don't know. They've talked about, a couple times talked about coming back in phases. But I can't imagine abandoning all of the infrastructure and buildings and technological advances that they've done with liquid crystal and everything else on campus and lab work to an online system. I could see LERs falling into more of an online category maybe, but as far as lab work and some of the more hands-on stuff, I don't foresee that being something that would be something that would fall in line with an online setup. You know what I mean? So in our conversations, I'm sure there's going to be something different than there was before as far as how we come back and when we come back. But I don't see, I mean, there's just an awful lot of infrastructure there for everything to go to an online platform. I think smaller schools, the D3s and the D2s may benefit with that kind of a approach a little bit better than a D1 school would that has that much of infrastructure built into it. So that's where we're at right now. I haven't heard anything different than that.
Thanks, Brian.
Did that answer your question?
It did. It's what I expected. I mean, there's a lot, like I said, it's as clear as mud as I used to hear from my grandfather all the time. So yeah, I just didn't know if you heard anything different than what I'm hearing. So thank you very much. Do we have any other questions? Hearing none, we'll move forward with the agenda. I have no resolutions were brought to my attention, so I don't believe we have anything with that. I've not been made aware of any need for an executive session unless that's changed. So that brings us to the all-important number 7. Can I have a motion to adjourn?
I motion we adjourn.
Thank you. Could I have a second?
I'll second it.
That sounds good to me. We stand adjourned. Just a reminder, we'll see everybody Thursday night. And if you have any questions in between now and then, please reach out to us and we'll see what we can do. Rebecca, if you'd please give me a call, I would appreciate it. Thanks, everybody. Have a good day.